So you've bought a property in your personal name and you're thinking about moving that property into a limited company. Whoa, let's have this conversation first. Yes, there are significant benefits of owning a property in a limited company structure. Naturally, it's a lot more tax efficient because of Section 24 that was introduced by David Cameron and George Osborne. It makes a lot more sense for inheritance tax planning. If you want to pass something down to the children or the grandchildren, it's easier to reinvest profits to scale your portfolio, but also you get the benefit of full mortgage interest deduction. This is the reason why many people are buying properties in a limited company structure. But this video is specifically for anyone that already owns property and they're thinking, does it make sense for me to move my properties from my personal name to a limited company? Well, the answer is yes, but the answer is also no, because it depends on what your goals are and what your plans are. I see this online all the time. Should I move my property from a personal name into a limited company? And some guru pops out from somewhere and says, yes, you should, yes, you should. But the reality is it's not that simple. Yes, there are going to be some benefits depending on your tax position. You are a high rate taxpayer or a basic rate taxpayer. But the real question is, does it make sense financially to move from a personal name into a limited company structure? Here are a few things that people haven't considered when trying to move their properties from a personal name into a limited company. Well, number one, if you've held the property for quite some time, there is a chance that the value of that property has increased. And if the value of that property has increased, there is a chance you might be stung with capital gains tax. It's important to understand that a property in your personal name is an entity. Your limited company, even though you might own the limited company, is a separate entity. So it means to move this property from here in your personal name into a limited company structure, in many cases, it can be deemed as a sale. So you are selling this property from yourself, to your limited company. Therefore, this company is buying this property, which we'll talk about that in a second. But it simply means here, if there is a sale, you might trigger capital gains tax. Now you've got to ask yourself the very simple question of how much do I need to pay in capital gains tax versus how much am I currently paying in income tax? Well, if your income tax bill is an additional £500 or £1,000 per year, but your capital gains tax bill is going to be 30, 40, 50,000 pounds, then does it make sense to move your property from a personal name into a limited company structure? That's one of the considerations that we have to have. Remember what I said a second ago. The property in your personal name is one entity. Your limited company, even though you own the limited company, is a separate entity. So therefore, it is treated as a sale from your personal name into the company. Now, if it's treated as a sale, then this company, your new limited company that's purchasing your properties from you, is likely to be hit with stamp duty. So now again, it's another taxation. So if your stamp duty position, if the property is worth £300,000, maybe £400,000, and your stamp duty position to purchase this property is £10,000, £15,000, £20,000, then you've got to ask yourself the very simple question. Is my current tax position, is what I'm currently paying in taxes by holding a property in my personal name worth the switchover where it's going to kick in capital gains tax or stamp duty? So it's not just as simple as, oh, I'm going to move this from here to here. We've got to take into consideration the cost of accountants. You've got to take into consideration tax planning. You've got to take into consideration incorporation. You've got to take into consideration every single year paying your accountants to file your reports. So everything comes down to working the numbers. It's not correct to suggest that every single person should move their property from a personal name into a limited company structure. Yes, you might benefit from full mortgage interest deductions. Yes, you might benefit from lower corporation tax over the long term. Yes, it might be a lot more tax efficient. Yes, you might benefit from being in a better inheritance tax position, but you also have to take into consideration and weigh up the cost of capital gains tax, stamp duty, higher mortgage rates, and just generally the complexities and maybe the legal obligations associated with having properties in a business. In my opinion, if you are a larger landlord, then it might be worth the consideration. If you own one property, maybe two properties, it probably doesn't make much sense. Now, of course, there are specialists out there that are able to creatively reduce your tax position in terms of your capital gains tax or your stamp duty. And there are some experts that can nullify your tax position completely when transferring from a personal name into a limited company structure. Hey guys, if you get any value from any of my content, make sure you like, comment, and subscribe. It really helps to get my content out there to more people who are thinking about venturing into property investment.